Hi, everyone. I am Paul Jarvis, and I will be going over my PowerPoint for exam one, which is assessing the future financial health for myself, which is General Motors Incorporated was the company that I chose, um, which is for people who are not familiar, they're the car maker, automaker in the United States that uh, makes Chevrolet, Cadillac, GMC, and Buick. Um, and we'll just jump right into it. I do have a second computer here on the side, so that's I may turn my head for better viewing for myself, but I'll be going over the same information. All right, so we'll start by our presentation or our outline of our presentation, where we have the introduction, the research objectives, research methodology and database company background, rationale for choosing the company, and then we'll jump into step 1 through 9, and then we'll hit the conclusion. We've all taken part in this exam, so we kind of expect what we'll see on here. All right, we'll start with the introduction. Again, my name is Paul Jarvis. I attend ASU for the Business Administrative degree program. I want to present the financial health and position of the largest selling American automaker, which is General Motors Incorporated, that's in the US. I'm going to be honest, the reason I'm doing this, not just for exam purposes, but uh, but I really would like to learn more about the corporate finance of the company and how large companies manage day-to-day financial operations. And to be honest, everyone knows, if most people in my classes know me, I drive a Chevy. I'm a Chevy guy. But General Motors has been in business for 116 years. And they're a collective automaker for Chevrolet, GMC, Cadillac, and Buick. Um, just want you to let you know, I wanted to also say, did you know that before the acquisition of each car company, meaning Cadillac, Chevrolet, and Buick, each car company was made by their own respective names? Just a little bit of information. Jump into research objectives. My main goals for this assignment is to review the company's actual company's goals, strategies, and operating characteristics. I want to look over the outlook or review the outlook of the firm's sales. I want to examine the investments that support the product market strategy. We want to know about future profitability and competitiveness or the performance of the competitive nature. We want to explore the future external financial needs, assess target sources of external finance, see what's going on with their 3 to 5 year plan and if it's viable or feasible, and then scrutinize the current year financial plan on whatever direction it may be headed. All right, so our methodology and database, okay? We're going to be going over information. I will have a wide array, but for the meat and potatoes of it, it'll be based on information from the 10K report and other sources from the time of the end of 2023 until June, basically around the June-July time of 2024, about General Motors Incorporated. Like I said, I'll be other sites from Google and Yahoo Finance and the 10K report. Company background. The current CEO is Mary T. Barra. There are approximately 163,000 employees with GM worldwide. Their main headquarters is in Detroit, Michigan. Again, they were founded September 16, 1908 by William C. Durant. And the products and services that they provide are wholesale and retail automobiles and parts and financial lending. It's called GM Financial. The major business activities are manufacturing, selling, and servicing their automotive products around the world. They are the automotive manufacturing industry, and the key statistics we'll go over. Some of them are market cap, price earnings, dividend yields, recent stock price, and sales revenues. We'll jump into the background, continue. So just some of the statistics here I thought was pretty interesting, which I think kind of outline the first part of how well we think we're doing kind of right off the bat here. We see that their market cap by end of 2023 was up 49.19 billion US dollars versus currently their market cap has increased to 53.41 billion US dollars. That's less than a year. Their price earnings ratio again also increased 5.01 or was up in 2023, but increased in 2024 to 5.34. Their dividend yields, meaning what you get back, return in dividends, and less than a year period have gone up 0.08%, which is still good. Stock prices have increased in the last year from 38.56 to 47.52, and their sales revenue again has increased within a year has increased by $6 billion. And actually, these statistics are less than a year. I'm going by end of year 23 versus mid year 24. So those are good numbers. The rationale behind choosing the company, again, I chose them for two reasons mostly. I'm very pro-American. But I'm also for global enterprising and global selling and trade and exports. The world. I think the world goes round, especially when it comes to politics and business. Like I said, I believe in global cooperation and conducting good business with other countries. But I tend to be more for American products to support the local areas, just like in other countries. A lot of countries are like that. They like to support their local businesses. And again, I am a Chevy lover. But I also think it's pretty cool that they're the largest automaker in the world. In the United States. But they are the 9th largest in the world, right behind companies like Tesla, which is 1, Toyota, which is 3, Porsche, which is 6, and Ferrari, which is 7. So I thought that was pretty interesting as well. All right, again, overview of the industry. The United States is home to the 2nd largest market for vehicles in the world. The U.S. light vehicle sales average around 10 to 15 million vehicles per year. That's a lot of cars. On average, automakers produce 5 million vehicles in the U.S. each year. Many foreign automakers, I thought this was cool as well. A lot of foreign car makers actually have U.S.-based engine and transmission plants because of our research and development capabilities. And so that was pretty cool as well. And the U.S. exports billions of dollars worth of automobiles to 200 markets worldwide. And the U.S. is expected to remain a leading market far into the 21st century. All right, we'll jump into step 1, goals, strategies, and operating characteristics. Just some cool facts here, or some things that kind of because I thought it was too much information to stuff into each slide. So I kind of did brief overviews, and I'll speak about them more in depth. General, again, goals, characteristics. The main goal of them is electric vehicle and ICE vehicle. ICE vehicle means internal combustion engine, as EV is electric vehicle. That is their main goal. They have what's called the 2030 GM 2030 plan, which means that they want to double revenue due to its increase in EV sales and software-enabled services by that time. They have an ability for margin expansion. They believe that with their EV software transformation, they can deliver margins of 12 to 14% in the future, which I think is totally doable if you know what consumers want. Now, GM also they've invested a lot of money into this, and they developed their version of an autonomous vehicle, or basically autonomous vehicle. It's called Cruise. They are hoping that they could deliver, once the market is ready for it, a potential for commercialize the autonomous services, which they believe has a potential to deliver $50 billion by the end of the decade. They believe that GM's main priority is future. They fear that if they do not keep up with the developing world, the developing software, and because it's ever changing, that they'll fall behind, and they want to keep up with the industry leaders so they won't suffer. Just to continue here, here comes from this snapshot is straight out of GM's 10K report, and it says here, our ability to maintain profitability is dependent upon our ability to timely fund and introduce new and improved vehicle models, including EVs that are able to attract a sufficient number of customers or consumers. And they also state our near-term profitability is dependent upon the success of our current line of ICE vehicles, particularly our full-size ICE SUVs and full-size ICE pickup trucks. So basically, they're laying out they're straightforward. Their goal is they're dependent on their profitability. Their profitability is dependent on their success of their current ICE and electric vehicles production and sales to consumers. So that outlines their goals without even having to say a word. Step two, outlook for the firm's sales. As we see here, I don't want to put a bunch of information. I like charts because they really charts and journals and things that actually portray what's really going on instead of death by PowerPoint. You can see here on the left side here, it does show that their earnings growth rate in the future will drop. That's their earnings. So revenue, as we all know, revenue is what companies take in, and then earnings is what they keep after all their expenses and liabilities have been paid. So it's the difference between that. That's what they keep. Basically, net. They say you could call it net profit or profit, but really it's called earnings. So their earnings rate is set to drop, but their growth rate is set to increase by 1.4%. And again, if you look at their auto earnings growth, it's 15.6%. Their revenue growth is 1.7. Future return on equity is kind of low, but it's still good. It's not in the bad rate here. And then if you look at the analyzing, if we're going to analyze their future growth forecasts, it shows that industry, market, company's low, but industry, market, actually for the short term and long term are set to increase. So that is good for long term. So once they're able to increase their market and industry stance, they can increase that earnings growth rate, which is good. So sometimes you have to take a hit to really get what you want in the long term. Some other information here. Their cash available versus equity versus total liability versus assets. So their cash is liquid cash is 23 point roughly. It's actually, I recalculated that, it's actually more than that right now. It's about $36 billion is what they have liquid. If you're thinking everything worldwide, I think this is just US based. Equity 71 billion, which is good. That means they have a lot of equity. Their total liabilities versus assets, they're both in the billions, the 200 billions, which is not the best, but they still have a far more, what are we looking at? About $70 billion more in assets. So they do have a higher liability range, but that's because they have invested so much money into the EV rescaling and ICE productions. So within years, you will see that their liabilities will drop because they have what's called GM securitization and GM financing. So they actually take in a lot of interest, which helps them. It builds their ability to pay down liabilities and debt. And you see here their expenses. So just outlines their GM financial interest. You'll see down here, total costs and expenses. So that just outlines that for the years of the past years, not current year, because this current year is not over yet. All right, we're going to jump into step two. Oh, no, sorry. Step two continued some more. This is a breakdown of their revenue the past 4 years, not counting today, or this year, I mean, 2020, 21, 22, 23. I just wanted to forecast and really show you how they've increased their revenue significantly. They have a positive rate of total return since 2020. We're at 122 billion, and so that looks like million, but it's really billions. 122 billion in 2020 to 178 billion. So we've kind of raised close to 50 billion, like I've said in the past, close to 50 billion in 4 years. GM has grown their profit margin, so they have a profit margin of 0.2% since last year. So that's really good. Their profit margin and profitability is good. And it also shows for a positive forecast for the future. GM has fixed and variable costs. I wasn't able to find the variable costs, but I was able to research and found that most of their costs are variable based on cost pricing of different things, whether it's batteries, different products that they manufacture, raw materials, things of that nature. The most of their costs are variable, but they do have fixed costs as well, which reflects in their 10K report. GM has some volatility due to its price to earnings and price to share ratings. So their price to earnings and price to share ratings are significantly lower. They're still good in the good range, but they're significantly lower than competitors, which just shows that they need to, again, like I told you, their earnings are really low based on their higher liabilities, higher debt, which in the future, with their ability to pay back interest, their good ability to pay back interest, that price to earnings and price to share earnings will increase. All right, here is an overview of their earnings and revenue history. So if we look back in 2014, it's relatively steady. And then if you look from 22 to 24, you can tell that their revenue has increased, but earnings have stayed generally the same. That is due to their ability in the past 5 years to pay down 60 to 70% of their total debt or liability, which is like 100, which was 122% debt to income, which is down to 178%. In 5 years, that's really good. So they're paying down debt, and that's why their earnings compared to revenue has significantly stayed the same. And you see here, down here, GM has high quality earnings. GM's current net profit margin 6.2 or higher than last year, 6%. So they have a good profitability margin. Step 3, investments to support the product market strategy. GM does a really good job at this. GM invests in, so they have private companies, holdings under them, and they also invest in other companies as well, which is considered marketable securities. As you see here in the thing, acquisitions and liquidations of marketable securities within their cash flow statement. GM has investments in several companies that they need to share a market with. Like I said, they own Lithium Holdings, which makes electric vehicle batteries for their electric vehicles. They also invest in a company called Cruise, which works with GM to build autonomous vehicles, and AC Delco, which is owned by GM. And those are the parts they provide for their ICE or internal combustion engines, which is their largest market still. Here is the consolidated balance sheet for General Motors. It just shows, I just wanted to outline their current assets based on cash and equivalents, marketable debt securities, accounts and notes receivable, GM financial receivables, inventories, other current assets. So they're definitely investing in product market strategies. And I want to reflect their assets versus liabilities. So again, their short-term assets outweigh their liabilities, outweigh the liabilities with the growth difference. So they say within the long term, their assets will increase. The difference between assets and liabilities will increase. We're looking at a $30 billion US in the long term, which is good for them because any growth is good growth. GM earns more interest than it pays, which reflects a drop in overall liabilities in the long term, which is reflected in the chart here. Step 4, future profitability and competitive performance. Like I have said before, they have a decent to good profit margin of 6.2% or higher. And I also found that this clip in the competitors Q2 of 2024, comparing the current results to its competitors. General Motors reported revenue increased in the second quarter by 2024 by 7.2% year on year. And their revenue growth was below General Motors competitors' average revenue growth of 34.7% achieved in the same quarter. So their performance is okay. It's pretty good for having a lot of investments, a lot of liabilities, and a lot of debts. All right, future external funding. So again, based on GM's cash flow statement, they do not require outside funding. For the most part, financing. They have borrowed in the past, but as of lately, they provide on in-house financing needs through GM Financial, which reflects large increases in interest payments being paid to them from lenders, whether it's through leasing of vehicles or if it's through purchasing of vehicles through interest payments. And we can see here in the automotive financing GM Financial liquidity, they have their cash and cash equivalents, borrowing capacity of unpledged assets. It says borrowing capacity on committed unsecured lines of credit and borrowing capacity on revolving credit facilities exclusive to GM Financial. So that also outlines that as well. Step 6, access to target sources of external funding. Like I said before, they have access to external funding or external finance, but as of lately, they've been sticking uniquely with their GM Financial and what is called securitization. I'll go over securitization in a later slide. And GM does have debt in form of liabilities, which has paid down debt as a substantial rate and continue in the coming years. And here we go. Here it says GM's net debt to equity ratio is considered high. GM's debt to equity ratio is reduced from, like I said, 226 down to 178. GM earns more interest payments, so coverage of interest payment is not a concern. Viability of the 3 to 5 year plan. So I guess you can consider this a 3 to 5 year plan, but with GM's eyes, it's mostly it's a 10-year plan. But based on steps 1 through 6, I believe that General Motors they call it their 2030 plan, is possible due to its current goals. It's huge investments into product market strategies. Definitely helps them or will help them in the long term. GM, it can be and is self-sustainable when it comes to financing activities and has a fair market value, which shows a future uptick in stock share values for the next 3 years. GM's capital structure for the time is good due to investing in long-term initiatives that will increase the long-term growth, like I've stated before. And I wanted to go over operational, strategic, financial. So they're operational, obviously, to increase the production of EV and ICE initiatives with plants. Their goal is they want to produce 50% of that by 2030 in each plant. Their strategic is to invest in product market strategies that will achieve operational goals. And then financial is to lower debt to income ratio by paying down long-term liabilities, which they have done and will continue to do. Current year financing. All right, so here we go. I'm going to talk about securitization, okay? GM has acquired a high level of debt to income to equity ratio due to past investments, which has since lowered, and that debt has significantly over the last 5 years. And I know it's kind of small here, but I'll make it bigger so we can see it real quick. Because I want to be able to, so you can see it. So basically, what GM does is they set contracts that originate by GM Financial. So GM Financial is the kind of the bank that GM has created that will lend, and which creates revenue. And then basically GM Financial will take the contracts from wherever the dealerships and from wherever they get them from, and they will transfer them to a bankruptcy remote special purpose. I know it's high-tech words. I had to really study it myself. But basically, they transform it into what's considered a asset-backed security, and then they use that as a way to take loans and collateral for corporate bonds that are sold to investors. So basically, the interest and stuff that they take from these loans, they sell. So they're making interest payments, they're receiving interest payments, but they're also selling that off to investors, which they also make money off. And very, very confusing, but it's called securitization. You can research it on your own. It's pretty interesting, but it's a very I think a good tool to use when you're trying to maintain a strong capital position. Let's just make that smaller again. Sorry for that again. All right, and then step 9, stress test under scenarios of adversity. GM's long-term goal is to increase production of those vehicles, like I've said. I predict, based on my overview and my assessing of the health of the company, past, current, and future, I predict that they will continue to grow at a positive rate, even if it's not a large positive rate nonetheless. They have remained the largest automaker in the U.S. and continues to outpace all foreign and domestic cars being sold in the United States. Now, how will GM react under these different situations if they occur? I believe during good times and bad, I think we're all going to say the same thing. Expansion during good times, slower growth rate during bad. Unless it's a full-on black swan, then a lot of companies may go under, but we don't want that. Recession, obviously, slow growth rate. And then also refocus on new tech. If there's changes in software or technology, refocus on tech avenues, which require new investments. Every company does that. It's just a necessity of the business world. I think with change in regulation, I think it depends on the law. Big changes like, I don't know, requiring a different, whole new type of exhaust system that may cost car companies billions and billions of dollars. So I think it depends on the law versus if it's just a little small thing they have to change, and I think that's manageable. Risks, I mean, risks are kind of something that we can make up. Uh, I, I think that I think the biggest risk they take is the EV scale. I think that people are buying EVs, but I just don't think the market is ready for a full EV takeover. And so I think that the need for EVs could drop, which could potentially hurt GM's initiative by 2030. And another risk maybe increase if they're not building their vehicles properly, maybe increase in defective vehicles, probably the only risk that I can think of. And then new competitors. Of course, new competitors can draw customers away and lower sales. But for the most part, usually people who buy specific vehicles we all have a bias. They tend to stick with what they know. So I don't think initially a new competitor would hurt GM overall. I think GM will always have financing due to securitization, but they also they have the ability to um, um, get financing or get financing from out from lenders, from big banks or such. Um, but because of their high debt to equity, they're not doing that right now. They're focusing on GM Financial and securitization. And then drastic management changes. Um, we haven't seen a drastic management change with GM in a long time. I don't think that I think that when things are going well, I think they kind of stick with what works, which is something I would have to agree with. And then conclusion. So to kind of make it short and sweet and not death by PowerPoint, I try to use a lot of photos and clips from the 10K report and uh, Simply Wall Street, which has a lot of financial information. It goes over the future health, growth, liquidity, goes over a lot of good information about publicly traded companies. But again, we learned that General Motors is the largest automaker in the US due to its sales numbers compared to competitors. Um, um, and their main goals are to increase output of their ICE, internal combustion engine vehicles, and their electric vehicles. We have seen that based on their positive revenue, earnings, investment strategies, investment in product market, and access to financing all play a huge role as to why they are so successful. We have also seen that even though their long-term liabilities are high compared to assets, they will continue to increase their assets due to risk and investments that paid off over time. Will they continue this trend in the future? I guess we'll have to find out. But all market-related platforms project GM to lower its debt to equity and increase their revenue and earnings significantly by 2030. And my learning styles, 3, 2, 1. You'll see there, those are my learning styles. I'm not going over them. They're available. And then I have my references and my acknowledgement where I believe Simply Wall Street has helped me the best, and GM Finance and GM 10K report and GM financial statements have all contributed to the making of this. So without farewell or bid adieu, I hope you found this slide or this presentation as informative. It's good to learn about new companies, and I look forward to any of your questions in the interview. Thank you, and have a wonderful night.